market today. Markets. There you go. All right, so there was a rally today apparently. Let's see, one day. All right, 5 days, one day. So there was a rally today. Basically, the market started the rally at 9 a.m. You can see that straight offshoot to the top, right? And it kept going, right? So that's what I'm talking about, right? So this was, I think this was the last business day, which was Friday. But let's go back to what I am talking about real quickly. Let's see. All right, so let's see what is so the so-called Santa Claus rally that tends to materialize in the U.S. stock market in the final week of December. So right after Christmas, which is the final week of December, and any given year, and the first two trading sessions of the new year. Okay, it's off to its best start since 2000, which is a long time ago. Sometimes that seems like yesterday, but I'm starting to realize that 2000 is a long time ago. That's like 22 years ago now. When the market gained 5.7% over that period, according to Dow Jones market data. All right, so let's see. In fact, in the 8 occasions since 1929, when the index has gained at least 1% to start that 7-session trading period near the end of the year, the Santa Claus rally has produced a gain 100% of the time. Okay, so 100% of the time this has happened, right? 100% since 1929. Yeah, it is what it is. Let me see here. Yeah, so yeah, this has been consistent, obviously. So at last check, S&P 500 1.38% was trading in record territory, up around 1.1, with Monday technically making the start of the seasonal period referred to as Santa Claus rally. So that's a new terminology for you to learn. This is good for all of us, at least in the short term. It puts good spirit. So some of you right now, you probably should be looking for places to put money. If you have money laying around, money that you earned this year, and if it's significant enough, you want to look for opportunities to buy assets. Because if you don't buy assets, you will have to pay taxes next year on that income, right? Especially if it's ordinary income. So definitely this is a good time to take advantage of some of the things that's going on. Now, clearly, real estate has done some interesting things in the past few months. Some particular markets have gotten some unnecessary, not unnecessary, but some unusual boost. Like people are overpaying for properties, and people are engaging in bidding wars and things like that because of the things that have happened in recent years. So just keep in mind that, again, over this last week right here, since Santa Claus rally is a real thing, 100% of the time it's always been a real thing. So be careful when you're spending money just because you want to get rid of money. Don't just buy just because you want to buy. If you're buying an asset, then that's always a good thing, and you should be buying an asset, right? So let me see here. So something else I wanted to share that I got from Grant Cardone earlier today. I thought it was a really good lesson that I would like to share with you. It's a 20-second clip, as a matter of fact. Let's see. Boom. Yep, I can pull it up really quickly. Awesome. Come on, let's go. Do we have it? Come on. Okay, we got it. Let's pull that up really quickly. All right, so Grant Cardone is somebody that I follow. I like his style. He doesn't say accurate stuff 100% of the time, but there are also, nuances, things like that doesn't really matter in the grand scheme of things. but his mindset on business in general is something I appreciate. So an example is what I'm about to share with you right now. Let's see. Boom. There you go.
5 things you got to do. 1, make a decision. 2, collect assets, not expenses. 3, increase your earnings. The only reason to get more earnings is so you can buy more assets. 4, don't lose money ever. 5, increase your tax write-off. And 6, get around some people.
This was previously today. This was this was earlier today. Okay, let's go through that really quickly again and make sure we grasp this, right?
5 things you got to do. 1, make a decision.
He gave 6,
2,
by the way.
collect assets, not
Collect assets. So there are times, there are exceptions in real estate. Obviously, we like to buy low and we like to sell high. We like to buy low and sell high, right? But that's basically as investors, right? But there are times, some exceptions to the rule when you buy, even though you're buying a little bit higher than you would usually buy, but because it's an asset, you still win anyway, right? And there's been a lot of examples like that over the past few years. Some of the updates that we've had in the game has been basically around that concept. For example, back in the days, you could only buy low and sell high. These days, there are ways to get around that. If the property is producing significant enough income, you can still buy high and still make a lot of money and then pay down over time. Basically, you're leveraging the bank's money, you're leveraging other people's money, and you can still buy a little slightly higher than what you would usually. I still always prefer to buy low. So, but again, the key thing is you're buying an asset, something that's producing income, and that's what is number one. It's about
collect assets, not expenses. 3, increase your earnings. The only reason to get more earnings is so you can buy more assets. 4,
increase earnings as against what? You know, I listened to this stream. I will try to see if I can link the stream at the bottom of this video later on. Increase your earnings as against what? As against trying to build your credit. There's nothing wrong with building your credit, but I see a lot of people put too much focus on it. If you build your credit, right? And let's see here. Yeah, if you build credit and you don't build your income, you're going to destroy the credit. It's only a matter of time. So it's kind of pointless. You're building a vicious cycle for no reason. So while there's nothing wrong with building credit, it's a useless effort when you don't build your income or your earnings, especially if you're not doing too well financially. You want to make sure that the priority is earnings, and of course the credit is for leverage. You will need that too, but I'm just saying, if you had to pick one, I think if you build your earnings, I think your credit kind of follows suit naturally, especially with a little bit of extra effort, right? So not all the way naturally, but you get the gist right there, right?
4, don't lose money ever. 5,
don't lose money ever. I don't know. That's one of the things that I disagree with him on. If you're going to take risk out here, you're going to lose money sometimes, or at least you're going to feel like you lost money. But I get his point. That's a rule that's even Warren Buffett prescribes when it comes to investing in the stock market.
increase your tax write-off.
All right, that's a big deal. Increase your tax write-off. So again, if you're acquiring assets in this last week, during this period right now, that if it's something that's going to generate you income, this part